Introducing the Blue Rock Total Income Plus Real Estate Fund, providing access to institutional real estate for individuals seeking income and enhanced portfolio diversification. The Blue Rock Total Income Plus Real Estate Fund is managed by Blue Rock Real Estate, a leading institutional alternative asset management firm with $12 billion in acquired and managed assets and with more than 100,000 active investors. Real estate could be an important element to a diversified investment portfolio. Historically speaking, did you know that adding real estate to your portfolio had the potential to increase your return while reducing volatility? There are many forms of real estate. The Blue Rock Total Income Plus Real Estate Fund pursues its investment objectives by primarily investing in a strategic combination of best-in-class institutional private equity real estate and public real estate investment securities, which invest in institutional-grade properties encompassing all sectors in primary markets that include high occupancy rates with low mortgage balances. The Institutional Real Estate Index has a 44-year track record going back to 1978, generating attractive total returns and with only 4 down years during that period. Potential risks associated with this type of real estate includes general economic declines, tenant risk, interest rate risk, and general and local real estate market risks. Let's take a look at some common investments with returns illustrated on the vertical axis and risks on the horizontal axis. Over the past 5, 10, and 20 years, institutional private equity real estate, when compared with other traditional asset classes like stocks, bonds, and public real estate, has provided higher risk-adjusted returns with lower volatility, making it a strategic addition to a well-balanced investment portfolio. Now that you know more about the potential benefits of adding real estate to your investment portfolio, TI Plus Fund, introduced in 2012, seeks to provide investors with 5.25% annual distribution rate paid quarterly, lower correlation and volatility to the broader markets, capital appreciation, access to best-in-class managers, daily pricing, and fee transparency. TI Plus Fund provides access to a select diversified group of real estate managers, which includes Prudential, a financial and insurance conglomerate, Blackstone, the largest alternative investment manager in the world, Invesco, a global independent diversified investment management firm, and many others. This access creates a diversified, all-in-one, multi-manager, multi-strategy, and multi-sector real estate fund. Previously, these managers restricted access to only the nation's largest public pension funds, endowments, foundations, and other institutions which required a large minimum investment of typically $5 million. But through the TI Plus Fund, investors can now invest in the same underlying portfolios with these institutional investors, including names like California State Teachers Retirement System, General Electric Pension Trust, Ohio Police and Fire Pension Fund, Teacher Retirement System of Texas, and others. TI Plus Fund's underlying investment holdings include gross assets of $292 billion, consisting of more than 5,200 high-quality properties across all real estate sectors with high occupancy rates and lower leverage. This includes some of the nation's most prestigious properties, such as these shown here. TI Plus Fund makes its investments in conjunction with 2 of the world's leading investment sub-advisors, Mercer Investment Management and DWS. Mercer has an exclusive agreement to serve as a sub-advisor for the fund's underlying private institutional real estate funds. Mercer is the single largest asset advisor on the globe with approximately $17.5 trillion in assets under advisement. DWS serves as a sub-advisor to the fund's public real estate securities and has approximately $70 billion in assets under management. Combined with Blue Rock Oversight, have assembled a strategic composition of private equity real estate debt, and public real estate securities to provide shareholders with one of the largest well-diversified portfolios in a single core real estate investment holding. Shown here is the fund's most recent performance returns. The total annual fund operating expense ratio and fee waiver for each share class is provided within the applicable prospectus, and the performance data quoted here represents past performance. Additionally, we're proud to announce that over the 5-year and since inception time periods, TI Plus Fund has generated the highest Sharpe ratio, a measure of risk-adjusted return, among all 40 Act funds. For the most up-to-date materials, please visit the fund's website at bluerockfunds.com. Investors should carefully consider the investment objectives, risks, charges, and expenses of the Blue Rock Total Income Plus Real Estate Fund. This and other important information about the fund is contained in the prospectus, which can be obtained by calling 844-819-8287. The prospectus should be read carefully before investing. Please listen further to review the following summary of the fund's disclosures and risk factors. Investing in the fund's shares involves risks, including the risks set forth in the risk factors section of the prospectus, which include but are not limited to the following: convertible securities, which are subject to risks associated with both debt securities and equity securities. Correlation risk, credit risk related to the securities held by the fund. Interest rate risk, including a rise in interest rates which could negatively impact the value. Non-diversification risk, lack of control over institutional private investment funds and other portfolio investments. Use of leverage, and management risk. The fund will concentrate its investments in real estate, and its portfolio will be significantly impacted by the performance of the real estate market, the debt market, and/or the equity securities market. The value of the fund's investment will increase or decrease based on the changes in the prices of the investments it holds. Limited liquidity is provided to shareholders through the fund's quarterly repurchase offers for no less than 5% of the fund's shares outstanding at net asset value. The level of the quarterly distributions is subject to change, and shareholders should not assume that the source of the distribution is net profit.